So welcome everyone to another My Pinnacle Network webinar of value to business executives and owners. Today's topic is saving money is making money. And we wanted to recognize our sponsors first. And so I'd like to go to Joe DeRamo, if that's okay, to give greetings from My Pinnacle Network itself.
Greetings, Joe DeRamo from My Pinnacle Network. We're a business-to-business networking organization. We have 6 locations surrounding Boston, including our newest one north of Boston. We've been around, this will be our 10th year in May, Steve. So we've made a decade. So we're bringing business-to-business professionals and business owners together to network. And one of the things we do are these wonderful webinars where we try to bring some value both to the business community and to our members. So thanks for having us, Steve.
Thank you, Joe. And then we have 2 other sponsors. The second sponsor is South Shore Networking Professionals, who connect local business people throughout the South Shore, typically not during non-pandemic times. They should be connecting again soon with live events and various locations, encouraging business people to chat and have a beverage together. And then the third and lead sponsor actually is Rockland Trust, who offer a wide range of banking, investment, and insurance services to businesses and individuals throughout retail branches, commercial lending offices, investment management offices, and lending centers throughout Eastern Mass and Rhode Island, both online, via phone, and brick and mortar. So that being said, why don't we get right to our topic? I'd like to introduce our esteemed guests. First, Alex Weatherall is an executive with Expense Reduction Analysts, who help companies analyze their expenses and attempts to save them money and shares, and they share in that delta. He is on the board of, or a member of the Mass Nonprofit Network. He is on the board of the New England Convenience Store and Energy Marketing Organization, and is the owner of a gas station / convenience store west of Boston. So he is in the trenches with the rest of us. Todd Chipman is our other guest panelist. He is an accountant with John T. Chipman Company. He's been a CPA for over 15 years, a graduate of Providence College with a BS and then a MST from Bryant University. Welcome, gentlemen. Thank you for being here.
Good to be here.
So
Todd, were you a point guard for the Friars? They're a good basketball team, man.
Yeah, they're awesome. And no, they wouldn't even let me in the arena. I'm just that out of shape.
Well, obviously you've got other talents, Todd, so we're happy to have you. So why don't we jump in, and our guests, please put your questions, if you have any, right in the chat. Joe DeRamo and I will do our best to feed those questions real time to the panelists. Meantime, why don't we start with some of the questions that are relevant to the topic. So Alex, let's start with you. I mean, you're a good portion of your focus in your business life is coming in and helping mid-sized companies and nonprofits save money. And part of the challenge is that people are so stressed for time and focus that sometimes they don't even want to go through the hassle of handing over their bills to you so that you can talk to the incumbents and determine maybe if there are other outside resources that might be more appropriate. Tell us a little bit about that.
Well, you're exactly right. I was just in a conversation yesterday with a colleague of mine who's a client manager for my company out in Michigan. He was telling a story of a woman who was probably a controller of a manufacturing company. And she was under the mistaken impression that it was up to her to sort of collect whole piles of invoices and accounts payable records and digitize them by feeding them into a factory. And so my guy stopped and said, no, just have your suppliers send that information directly to us and let us look at it. And she said, oh my goodness, thank you so much. That'd save me a ton of time. And so the lesson is, the way business is done these days, and you're right, I mean, business can involve a not-for-profit organization as well. Thankfully, the digitization of our financial results is such that a few mouse clicks, usually from a supplier, gets us all the information we need to look and see whether there's opportunity to save money on a client's or a prospective client's indirect costs. And so the reason we are so appealing to small and mid-sized organizations is that invariably they just don't have enough time, to your point, enough time or focus to stop and gather the information that they perceive we need to be useful. We can do all that almost always by asking their suppliers to do it for us.
Okay. Well, thank you, Alex. So that gives me the sense that you can streamline the process and make it a lot less painful. Todd, let me ask you, you have a different perspective on cost reduction. Can you give us that?
Yeah. So being a CPA and also having, as you mentioned, the master's in taxation, it hasn't quite yet made me the life of the party, but it does offer a unique perspective in kind of the phrase, what is saving money? So we generally come at it not from more of a cost savings, but a tax savings perspective. We can spearhead things. There's some buzzwords you probably, or most people have heard, tax planning, retirement planning, estate planning, entity selection. These are all arguably different phrases for the same thing, but it allows us to save dollars that are available to business owners and even individuals for that matter, that they might not even are aware at the time they're even on the table.
Okay. And so can you give us a little clarity on some of those terms and what we need to think about from your perspective?
Yeah. So entity selection is probably one of the phrases people would be most familiar with, but don't necessarily realize it. So when one starts a business, there's actually a decision that's either made or can be made, whether you actively make it, and it's choosing what kind of entity you want to be. By default, you're just a sole proprietor if you do nothing. So there's other selections that one can make. Limited liability company or LLC, that's kind of another very popular choice that people are familiar with. But then there's the more kind of formalized structures such as corporations, partnerships, S corps, things like that, or entities such as that. And the takeaway here would be that there's no one right answer. And actually, it would typically be a combination of entity types over the life of a business that would generally make the most sense and be the most cost efficient. Really, what we're looking to strive for is one, find the one that protects the owner, protects the owner's family and their assets, and then take an additional step further and mitigate taxes as much as possible for the owner and their family. Typically, most new businesses or startup businesses are what one would call a sole proprietor, meaning they just start operating and making money, and now they're a business. That's good in some respects in that it's very simple. There's no real additional compliance costs. It gets all reported on your personal income tax return. But that has some cons associated with it also, or it's lacking in other areas, as one can assume. Really having no fine line between the owner and its business, there could be some legal ramifications in addition to tax costs that they're not even aware of. And typically it's when the business reaches a level, which is a relatively low level, where the costs of selecting a more formal entity structure or even plan are surpassed by potential savings. And that's when things really get exciting, or at least as exciting as tax planning can be.
Right. Okay. Thank you. And Alex, let me go to you. Admittedly, being a small business or even a mid-market sized business can be sort of a lonely environment. You're trapped in your little office, and although you may be surrounded with good people, oftentimes you're isolated in making decisions. How do you help people cope with those pressures?
I think it's very true. I think all of us can agree that, and Todd sees this every day, if you own a business, however small, it can be very lonely because all the tough decisions land right with you. You lie in bed at night thinking about all the things you wanted to get to the previous day, but just couldn't. We'll get to it tomorrow. And so that constraint on time creates an opportunity for us. The other thing is, in our experience, and business owners know this, they can feel it, they just don't always have the tools to act on it. In our 30 years of experience, typically on a profit and loss statement, the indirect costs, which is our expertise, that is not payroll and usually not direct inputs, if you're a manufacturing company, your cost of goods, but everything else. It's clear to us after 30 years that the typical middle market or small and middle market organizations paying between 10 and 30% more than they need to for that. And so what we can do, and it's not easy because you got to reach these business owners or senior executives where they are. But if we can sort of earn their trust and plant in their minds the notion that, hey, listen, no downside to us having a look. And if we do get the chance to have a look at their spending patterns on indirect expenses, it's very, very likely that we can get them better costs and along the way, better services. So if we can get past that loneliness, as you say, and get the 20 or 30 minutes you need to sort of get them to sort of take a pause from all the stresses that make their lives as interesting as they are, and then trust us to have a look at their accounts payable history and come back and say, listen, we think we can be useful here, 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 and here, then we can do really good things. And that typically materializes as I've said, 10 to 30% savings in their indirect costs. And at the end of it, the outcome is a degree of confidence in these business owners or executives that, hey, listen, I can now rest a little bit easy at night because I know that I'm buying well. And the reason I know it is I've had a very experienced third party who makes a living doing this, and they said so.
And can you give us some clarity as to some of the areas that typically you're able to create significant savings?
Yeah, I was just making notes recently. In the past couple of years, and this has been pretty typical throughout history, the top 5 or 6 categories in terms of the number of projects that our analysts have undertaken. I'll just look real quick. Telecom is number one. And telecom is an opportunity where we can see that perhaps they don't have A, the optimal system, or B, the optimal fee schedule. And we can open up through a bid process to outside providers who make a living doing this. And what we all know is if you haven't opened yourself up to the opportunity that an outside telecom expert could provide, you're captive to what are essentially monopoly providers, Verizon, AT&T, so on. So telecom's number one. Office supplies, kind of a boring topic, but everybody consumes them. Less now in a virtual environment, nonetheless, office supplies. The third one is outsourced payroll and outsourced HR, online HR services. Everybody with a certain number of employees, shouldn't say everybody, but almost everybody, I think Todd would probably agree from his experience, outsources their payroll. And generally speaking, over the course of time, escalators mean you're paying more per head than you need to for that. We can be very useful there. Those are the top 3. Freight of all kinds, truckload, less than truckload, small package freight, we can be very useful with that. Copier contracts is number 4 or 5, I guess. And the last one is merchant card fees. And merchant card fees, of kind of like telecom. You get yourself in the habit of paying them. You don't look at what you're spending, and those can creep out of control very quickly. This gives you a sense for the stuff we do.
Okay, thank you. And so, Todd, from your side, you made it clear that tax planning can be sort of elusive, a little hard to understand. In some cases, we don't want to understand. We would rather leave it to you. But maybe you could tell us a story, a client story that gives us a better sense of how you're able to help save companies money.
Yeah, no, definitely. And it is a moving target. And when we have our initial conversations with people, they're like, well, I feel like I'm drinking through a fire hose. This feels like an entire tax code's worth of information we're trying to go over in a half an hour meeting. And, the truth of the matter is we kind of are, but that's why you have your team of expert advisors, these people that you surround yourself with, such that you can focus on what you do and let them do what they do for you. But you need to trust them first. So it's having those centers of influence that you're comfortable with is of utmost importance. That's really one of the keys to any successful business owner. For us, we kind of coin ourselves as being a quarterback for a lot of plans. It's nothing that we ultimately execute ourselves. We just know enough that this plan could work, but we need the other team members to participate. Without the attorneys, the insurance brokers, investment advisors, marketing specialists, cost consultants, without these people working together on behalf and in the best interest of the business owner, our plans and ideas are just that. They're just ideas and plans. Nothing's been executed. To kind of put some color on that or to really show how this can be a successful story. I've kind of got some notes here on one of my first clients and still clients today. I'll try to keep the numbers to a minimum, but I think to some extent percentage of numbers are important. And I've rounded them for ease, although it was killing me to do that. We like to be pretty so one of my first clients was actually, she decided that she wanted to start a service-based industry, a business. She was in the industry for a number of years. So she was going to be successful right out of the gate. She already had arguably a book of business. So it was just a matter of hanging her own shingle. For ease of numbers, her net income was that first year was probably going to be, we knew at the time, around $200,000. So that's income less expenses, $200,000. That's before taxes. Because that's where we were coming into play and say, well, what can we do to help with this? What kind of formal plan can we come up with? Had we done nothing and she just defaulted to that really simple sole proprietor we were talking about earlier, she probably would have paid around 50% of that net income to taxes. And just again, for round numbers, 30% would have gone to federal, 5% to the state, and then 15% for self-employment, which means after working really hard and accumulating a net income of $200,000, she's only walking away with $100,000. So for us, it was worthwhile to have a conversation. She had an attorney to kind of finalize and formalize some documents, which is always a good idea with any business. But then the team we decided to accumulate was a payroll specialist, as Alex had mentioned. Outsourcing makes the complete sense there. An investment advisor and a retirement plan administrator. And then really we got to work. We sat down, we looked at the projected numbers, what they were looking to potentially save and what the costs of hiring all these people were to be, because it's important. You never want to take a plan the benefit's going to be less than the cost it is to implement it. So the first thing we did was we elected to be treated as an S corporation. I'm not going to get in the weeds in that. Really, the takeaway is that plan, given the additional costs that would be associated with it, which are probably around at that level, $7,500, which is, one could argue, is significant. But after those additional costs, we were projecting that the effective tax rate was going to drop from 50% down to 38%, meaning instead of walking away with just $100,000, even after those additional professional costs, they were now going to walk away with likely $118,000. So they're ahead $18,000. We took it even a step further, and we set up a solo 401k, hence the investment advisor and the third-party administrator. Solo 401k, there's plenty of options and flavors of retirement plans out there. It's important. But for them, this one made sense. It's like a 401k that we probably all have come across with our employers and business clients or businesses we've worked for. But this one is kind of a boiled down version for a single individual, which she was, hence the solo aspect to it. So it's got all the benefits as the big guy's plan, but boiled down and simplified cost and administrative wise for small business owners. This allowed her to fund retirement through the business now at the same level that if she were an employee. So she's on that same level playing field as larger companies. Doing this now effectively reduced that income tax percentage from the original 50% we talked about. We're approximately down to 29% now. Now, granted, the fees went up with this next step. So now we're probably looking at professional fees of $13,000. But even after those new fees, they were walking away instead of with $100,000, they're now walking away with $128,000. So $28,000 more. Not to mention $32,000 of that $128,000 is now in a tax-deferred retirement account, earning money tax-free until at which point they want to take the money out in their retirement. So really, making money and saving money are definitely two different things, but I think it's important that they're playing on the same team. I'll leave you guys with just one particular quote that has always struck a chord with me. It's actually from a Judge Leonard Hand. He was one of the more influential judges that actually helped shape the modern tax and legal system we know today. These quotes go as far back, and they still ring true today. These go back all the way to 1934 and 1947. Anyone may so arrange his affairs that his taxes shall be as low as possible. He is not bound to choose that pattern which will best pay the treasury. There is not even a patriotic duty to increase one's taxes. Over and over again, the courts have said there is nothing sinister in so arranging one's affairs to keep his taxes as low as possible. Everybody does so, rich or poor, and all do right. For nobody owes any public duty to pay more than the law demands. Taxes are enforced exactions, not voluntary contributions. To demand more in the name of morals is mere cant. Little fluffy language there, but you get the point. It still rings true today. Tax planning, there's nothing to be ashamed of that. And I think it's something people need to be aware of, especially when starting a business.
Okay, thank you, Todd. Alex, let me go to you. I'd like to hear a real life story or of how you were able to come in and help a company save money and make money.
Yeah, fun to do that. And I guess the example that pops into my head is a not-for-profit, actually. It's a very distinguished Boston art museum. And this touches on something Todd said. You listen carefully to Todd. One of the reasons Todd is such a good choice for your tax woes is that, it's not just himself in his CPA MST silo. Todd succeeds by enlisting help: 401k administrators, third-party administrators, attorneys, retirement planners. So what he does, as a matter of course, is he brings in outside experts, and all of those people bring to bear their particular expertise on the client for the client's betterment. He told us a nice story about this woman who's now prospered from it. Our model is the same. This museum in Boston, like all art museums, you can picture the guards who lean against the wall and they have typically blue blazers, a white shirt, gray pants, black shoes, and they don't let you touch the paintings. And this museum, I didn't suggest, when I saw their accounts payable history, as I mentioned earlier, we look and see where they spend money and where might we be helpful. I didn't even suggest that we look at uniforms, because they weren't spending a great deal of money. They were spending about $23,000 a year on uniforms. But the chief administrative officer suggested to me, he said, Alex, could you look at our uniform spend? And the reason he asked is that it turned out, for a long time, the museum had wanted to get rid of the blue blazers because they thought they were sort of old-fashioned and passé, and they couldn't get them to fit very well. And stop renting blue blazers for their guards and give them sweater vests instead. And the other thing that was bothering this museum about their uniforms was that they were forcing, it was the company out of Western Mass, these are sort of quasi-monopolies, and if you don't watch them, they'll charge you a fortune. But they were insisting that the museum take their uniform rental renewal deliveries every Monday. Well, the museum's open on Monday, but the museum's closed on Tuesday. And so the CEO said to me, Alex, we're not doing anything else on Tuesday. If they could just please deliver on Tuesday, it'd be a heck of a lot easier for us. So I said, yeah, let's have a look. And so back to the Todd Chipman example, the way we work is that I have colleagues all over the country, all over the world actually, who've left careers in certain industries, and they've taken this industry experience to my company, Expense Reduction Analysts. And our uniforms expert is a guy named Gary Herring. He lives out in Ohio, south of Columbus. And Gary spent 30-something years in uniforms, so he's forgotten more than any of us know about uniform companies. And so the long and the short of it is, Gary got them to change their delivery date to Tuesday morning when the museum's closed. He got them sweater vests, and he cut their spend from $23,000 to $11,000 a year. So we cut their uniform spend by more than 55%. And that was with the incumbent provider. What you learn is that suppliers, however rapacious they are, they do really, more than anything else, they want the business. And if you treat them respectfully and you point out that, gee, fair is fair, you can do marvelous things, even with rapacious uniform providers. So that's my favorite example, Steve, to answer your question.
Okay. And so my question to both of you is, what are some of the red flags that we might see if we bother to keep our eyes and ears open, that would indicate to us that we might be paying too much for any one of our costs? I put that to either one of you, and actually eventually both.
Yeah, I'll dive in first. So for us, if kind of a buzzword that we keep our ears to the ground for, a buzz phrase, is when someone says, I think I'm paying too much in taxes. Whether they're getting an impression because of the barbershop talk or the bar talk, a lot of our conversations, I don't want to say a lot, I'd say a fair amount of conversations start with clients come to us after having heard an idea, we call them the barbershop or the bar talk. Generally speaking, they're misdirected, but there's something there to be discussed, and we can kind of get them back on a straightened path and discuss an option. And generally, it will result in a decision being made or something that can be done. I think the initial step for anybody is really to, and as Alex alluded to, that this is time is a hard thing to come by as a small business owner. But to really put the time aside to at least open yourself up to having initial consultations with professionals, whether it's a cost consultant, marketing specialist, there's whatever your problem you're having in your business or wherever you think you could be performing better, there is likely somebody that can help you accomplish that. It's just a matter of starting that conversation.
Okay, thank you. And Alex, any red flag icons for you?
Well, it's dangerous in our business to presuppose. What you find is that organizations have particular expertise, or they have particular experience, or they have particular supplier relationships. And so they're better informed in some indirect cost areas than others. So it's, one of the things we train ourselves is it's never wise to make promises as to how much you think you could save or where you might find problems, because it's like meeting someone. Be careful not to judge before you get to know them, because that you can't judge a book by its cover. Where we can start to be useful is to see, ideally, a general ledger in some detail, but even something as basic as a 12-month accounts payable history. Who are you spending money with, and how much are you spending in top dollar, absolute terms. And all we do is we look at that and we just do a fairly vigorous assessment based on by supplier, by top absolute dollar spend, relative to the size of their purchases in units. And we can come back with, as I've said before, a very accurate assessment as to where we think we can be useful. But again, I put it like that because it's dangerous to put yourself in a position where you might be perceived to be making a promise that until you research it more carefully, you can't deliver on. And so I guess it's a long-winded way of saying, my rule of thumb applies because it's in the data. In an indirect cost on the P&L, regardless of business, it's generally true. We can say between 10 and 30% for our client base.
Okay, great. And so it was put in the chat that one of the key costs is telecom. Joe, you wanted to expand on that?
Yeah, just what you've found is percentage-wise what you can save clients on telecom, and how is that possible? What are some red flags when you look at a telecom bill? You can almost tell immediately, you're paying more than you need to.
Well, Joe, if the question's for me, telecom's fascinating because think about this. I have to confess, and don't tell anybody. In my office, I have a landline. Why do I have a landline? Well, because in the town where I live, the cell coverage is okay, but it's intermittent enough that if I have calls going out from my office, I don't want to have the hassle of break and lock, right? But otherwise, the thing sits idle. So picture a company with 200 FTEs and a couple of locations. And if they're anything like me, or they've been in business for a few decades, they have countless, at this point, landline circuits, right, that haven't been used, but they're still paying for invariably. And so one of the things that anyone who does cost consulting work in telecom needs to do is work at a remarkably granular level and count all those, for instance, sort of unused landline circuits. And this demand that you not be charged for them anymore. It's not splitting atoms, but it's very, very detailed, granular work that we do. Another thing about telecom is, so much of any telecom bill isn't so much the charge to deliver the service or the service itself, but it's the taxes around the service. Are those taxes legitimate? Sometimes they are, but oddly enough, sometimes they're not. And I guess the last thing I would say with telecom is, we all know this as consumers. When you initiate a relationship with a telecom company, almost invariably there are some sort of introductory attractive premiums that run out after a certain amount of time. One of the things that we find all the time is, those premiums were never entirely honored. So a lot of the benefit we bring from a telecom audit is a bit of a clawback to claim credits that were promised and contractually given, but never effectuated in terms of the credit on the bill. So telecom is complex, but simple at the same time. So, mid to high 20s is what we what we save on a typical client's telecom engagement.
Okay. And then in terms of business size, from very small business, sole proprietor, under 100K versus, multi-employees, maybe multi-locations and bigger gross sales, where are you able to really come in and help people with savings? Is there a profile or a beginning point of the type of business the size of business that you're able to help? And I ask that to both of you again.
So for us in the financial industry, we have kind of a two-prong approach. One, and it's generally the reason people first come to us, is purely compliance. It's, I need to file a tax return. I don't want the government coming for me. Two then is, oh, you guys are not just tax preparers. You're a CPA firm, you're advisors. Then we can start to have conversations. In terms of a line in the sand, it depends. Generally speaking, there's cost savings just being in compliance, and there's costs with not being in compliance. So really anybody at any level, even just starting out with a small sole proprietor in your example, where maybe they're not even certain if this is going to be a thing, maybe they're trying something new and unique, and either it takes off or it kind of fizzles out and they go back to the drawing board. But at least when we work with somebody, we work towards not solving problems, but rather preventing them, teaching good and best practices right out of the gate. And that's something they can use if this thing goes on forward, or something they can take with them if they want to try a new endeavor. It's nothing that, we would never not work with somebody because of there isn't potential savings there. But we would always gear the job or the engagement around what they need today, help them move going forward, and then have it grow with them. So they're never taking on too much too soon.
Okay, thank you. And Alex, is there a size level where it really makes sense from your standpoint to come in and analyze and make recommendations?
The museum I talked about, just in round numbers, their accounts payable history, their most recent 12 months accounts payable record showed about $15 million in spending. And we've done really useful work for them, and I described uniforms. And I would say about 15,000 plus or minus is a good starting point for us. So it's a fairly large organization, and that museum has in the neighborhood of 200 people on the payroll, not all full-time, but about 200. But for us, I would say 15 million and on up, and 100 person headcount. History says we can be very, very useful. I would add a little bit further flavor to it. Our expertise is in the cost categories. And one of the reasons that somebody like us as a third party is useful is that if you're a uniform supplier, if you're a chemicals provider, if you're a telecom provider, you're serving all kinds of industries, for-profit, not-for-profit, what have you. Uniform companies sell uniforms to hospitals and manufacturers and art museums, and they wake up every day dreaming of how to maximize their sales price to everybody. But if you are a single executive in a museum or a manufacturer or a hospital, all you know is what you and your peers are paying for uniforms. It's companies like us that have visibility to what everybody's paying for those uniforms. And that's why it's one of the reasons we can be useful. And the last thing I'll say is, by virtue of the fact that the P&L statement for a manufacturer is very, very long on the expense side. Manufacturers spend money on just about everything: inbound freight, pallet programs, industrial gases, uniforms, payroll processing, safety supplies, packaging supplies. And so in the for-profit side of our business, manufacturers happen to be our biggest beneficiary among clients. And I'll just finish by saying one of my clients right now, an active client, is a Boston-based food manufacturer. They were spending just over $1 million a year on packaging. I'm talking about cardboard, pallet corners, plastic wrap, labels, $1 million. We just finished our fourth quarter review for them. We've saved them $227,000 in 1 year. And so they're a good organization. They buy well, but still, that's a remarkable number on $1 million packaging spend.
Great. Well, thank you. And so really my last question is, what does an engagement or an initial conversation even look like with both of you? Because I think our biggest barrier as business people is, what am I getting myself into? And what will it either cost as an introductory conversation, and what are the logistics of that conversation? How long is it? What do I need to supply you with? All of those things. So what is the engagement, the initial engagement conversation like?
Well, my first assignment, and I sort of hinted at it earlier, is to project a certain trustworthiness so that this principal, who's very busy, is willing to listen. And the person that fits that description is a seasoned manager, owner, executive who's got just a little humility. In other words, understands, hey, look, what harm in giving an outsider a look at my spending pattern? And that little willingness to say, hey, maybe I could use some help. It's not a commonly found trait. I'm not sure what Todd would say, but I got to find someone who's got some experience and some grit, but just a little bit of uncertainty and humility to give me an opportunity to have a look and see if I can be useful.
Okay. And again, typically that first conversation is half an hour, an hour.
Half hour is all I really need.
Okay, great. And Todd?
Yeah, for us, most conversations start with a phone call. Usually somebody reaching out, just kind of asking the same question that you asked was, does this work? What do I do? What do you need? Where do we go from here? And usually for us, it's a half-hour phone call, really just to listen. You know, we do a lot of talking through our careers, but the highest level of value I think we offer is just by being a little bit of a kind of a psychologist for our clients, just sitting back and absorbing what they're saying, because that's where we'll learn, one, a quick understanding of what they're seeing. They're our eyes and ears. We can see the numbers, but we don't really see the day-to-day like they do. And that allows us to be a better advocate for them. From there, then it's just a matter of taking what they've said, because that's now our understanding of what's important to them or what they're concerned about. If it wasn't that, they wouldn't have even brought it up. That's usually what the first half-hour conversation entails. And there's typically no cost with that. I say typically because sometimes we do a few rounds depending on the size of the business, and if it's a larger company and there's a lot kind of a scheduled process, we'll tell them, we'll work through you in this discovery period. If we find that we can't be of assistance, or you decide maybe we're not a good fit, we'll charge you for the flat hourly rate, and we'll move on. If we decide to work together, we'll credit this against the ongoing engagement. But generally speaking, for smaller to medium-sized family-owned businesses, it's typically a free phone call just to understand what their concerns are. And then we will request typically the prior year's tax return. There's a lot of information in there. We know how to interpret and read that. And that will allow us to understand, one, are there goods, books, and records, or is that maybe priority number one, getting them in good compliance? And then two, how are operations looking? If the books and records seem appropriate and the prior filings look good. Sometimes we discover issues with the prior filings that need to be addressed first, so we'll prioritize issues. And then from there, we come up with an idea of what services they might need, whether it's amending returns, preparation going forward, maybe planning services, and we'll kind of put those all out there. Generally speaking, with the exception of maybe amendments, there's no real fire sale, and it's a very soft sell, at least with me. It's here are your options. Consider them, talk amongst other people, maybe even get second opinions. And we can get you a quote for each of these different bites. Each one, we call them engagements, whether it's a tax preparation engagement, bookkeeping engagement, tax planning engagement. So people can kind of choose what works for them at that point in time, and the projects can grow with them. They don't have to take everything on at once. I alluded to earlier where, there's all these entity types one can choose, but they range from really simple structure where we really don't do much, it just exists, to really complicated structures where you have to kind of live in this box and do these things a certain way. you don't have to jump right into that box right out of the gate, even though it might arguably have a tax benefit. Sometimes the time and the stress of making the transition outweighs maybe a negligible tax savings. So we'll work into that going forward. So again, it's not to sound redundant, but they're all moving targets, and it's really a matter of what the business owner or the client is capable of handling, wanting to handle, and willing to handle.
Okay, thank you. And so that sort of sums up my questions. I've got two last comments. One, is there anything that we didn't cover that the panelists feel we should mention, and or our guests, you have any questions, leftover questions based on cost savings that we did not address today?
Well, the only thing I would finish with is that, we are, needless to say, for those of us of a certain age who experienced this same pattern in the late 70s into the early 80s, we're in a significantly accelerating inflation climate right now. And one of the effects that that's had on our business is there's a hesitancy, which is probably a sensible, sort of realistic hesitancy on the part of business owners. Well, my costs are going through the roof. How can you be useful at all? And our answer to that is pretty straightforward, is that in an inflationary environment, you're going to pay more. And if you make the mistake of turning down an opportunity to have somebody like us look at what you're paying, you're going to pay a whole lot more. And so, we're in such a changeable time, pandemic, supply chain constraint, now war in Europe. There's a natural tendency to keep your head down and not take on new things. Mm-hmm. And in an inflationary environment, that can be a very short-sighted approach. So I would caution anyone who's got any concern about their costs, now's a very good time to talk to somebody like me, and frankly, talk to someone like Todd, because the future is going to be different. There's no question about it. Okay.
Todd, any parting remarks?
No, I try to keep the tax talk to a minimum just for everybody's sake.
Well, thank both of you. One of the things that I'd like to put out there for folks who are both on this webinar and who may see it in the future on YouTube is we are very open to, we do a monthly webinar. We're very open to both topics and speakers that you might feel would be of value and interest to small to mid-sized businesses. In particular, I think in addition to inflation, one of the real changes that we're seeing is the challenge to find good employees and retain them. So those are two general subjects. The other topics that tend to resonate really well with audiences are almost any marketing topic, because everyone wants to know what's the latest shiny object that they should be considering. So if you know of somebody who would be a great presenter, please let us know. You can find me on LinkedIn, Stephen V. Dubin, PR Works on LinkedIn, or you can go to prworkzone.com or mypinnaclenetwork.com. And I think that summarizes it. Thank you both guests for being here today, as well as our panelists. And we look forward to providing additional content for you in the near future.